Now, the part of the show that I get asked probably the most questions about, and that's the part of the show where we talk about three things that individual investors should be focusing on, should be considering before they make their investment decisions. And a little bit different list this time. Key tech earnings out next week. We've seen that, right? Earnings reports. We've already had some of the big banks in the US report, pretty much all the big banks. We'll talk about that a little bit later on the show. But really, most people say bank earnings season doesn't really start until the tech companies report. The Mag 7 or Mag 8, as we now call them, Batman, the Magnificent Seven, the eight biggest tech companies in the world today in the United States. Until they report, many people believe that we're not sure exactly how the economy is faring. So, something to consider there. Policy announcements out of the Trump administration. So I'm not talking about their recent orders that the president has put through, executive orders that he has put through. I'm talking about just announcements, just talk. Just talk out of the Trump administration actually can move markets. And as I said, I think on the last show, last time President Trump was in power, 2016, you quickly realized that you had to follow him on Twitter. His Truth Social Twitter handle had to be something that is frequent on your phone or everywhere else, because sometimes markets move. You really don't know why, and you find out that the president has made a comment about something. So his commentary alone, his announcements alone, definitely can move markets. And number three, this is an interesting one because it's about making decisions to invest in the markets today. Not making that decision or not investing in the markets because of fear, because of uncertainty, or because maybe you just don't like the new president is probably not something you want to do. I think if you have the money to invest today, you need to be an investor. And we'll talk about that as well. So let's move on to our first point. Key tech earnings out this week. And you can see them there. Key tech earnings out next week. You can see them there. Apple, Tesla, Microsoft, and Meta, formerly Facebook. 4 out of the Mag 7, 4 of the biggest tech companies in the world. There you have, $2 trillion companies in Apple and Microsoft, and Tesla and Meta, well over $1 trillion in market cap. First chart here that talks a bit about the tech sector is the Invesco QQQ. We have it on our broadcast many times. You can see here that really since beginning of December, tech stocks have kind of fallen off a little bit. You had markets making lower highs and steeper lows. So that's not a chart you like. It's kind of moving to the downside. But with the recent announcement, and we'll talk about that shortly as well in our next point, but with the recent announcement out of Washington, talking about building AI infrastructure, teaming up with Oracle and SoftBank and OpenAI, the parent of ChatGPT, building out as many right currently as 10 different data centers and with the hopes of building maybe as much as 20 down the road, putting investment, 100 billion from SoftBank into the United States, really putting emphasis on AI and building out AI and GPUs and infrastructure and data centers. That recent announcement out of Washington yesterday really started to get the ball rolling once again in technology. And we talk about the president talking about getting rid of a lot of the red tape, a lot of CEOs really excited about what can happen under the new administration. Very pro-business, which is good. So we talk about why you have to look at key tech earnings. Well, that's a reason why, because the president is focusing on that and focusing on artificial intelligence. Our next chart here, Microsoft, one of the stocks that it's going to be reporting. And you can see Microsoft has been having a bit of a tough ride since their high points, I guess now back in the summer, July. They really haven't done so well. And many people are actually looking at them as, okay, is it an opportunity to buy? As we know, Microsoft invests in OpenAI and ChatGPT. And so this new, agreement with the government, OpenAI and Oracle, definitely will benefit Microsoft as well. We saw their stock price move significantly higher this morning on the back of that news that was released last night. Meta Platforms, our next chart, formerly Facebook. You can see here, better chart than Microsoft. It's had a bit of ups and downs, but overall, since last summer, it's pretty much gone from the bottom left to the top right, trading just off its all-time highs. And once again, we saw Mr. Zuckerberg, CEO of Meta Platforms, at the inauguration, sitting right behind the president, alongside of Sundar Pichai, CEO of Alphabet or Google. We also saw Tim Cook, CEO of Apple. So you can clearly see how important business is to this current president, and the big cap tech names were right there and supporting the new president. Tesla, as we said, who has supported the new president more than Tesla, right? And Elon Musk. Elon definitely out and about during his president's campaigning for the president. And, we've seen his stock once again go above $1 trillion in market cap. So another one of the biggest companies in the world today. Tesla obviously involved in not just battery-powered cars, but so much more. And Elon Musk leading up the Doge, I guess, part of the government in the United States, looking for ways to cut costs and bring down spending. So we'll see what Tesla says next week. And last but definitely not least, which was once the most important, I guess, or most large company in the world, the largest company in the world, Apple. They report as well. But since their recent decline, Apple is actually no longer the largest company in the world by market cap. That has now been surpassed by, yes, you guessed it, NVIDIA once again. NVIDIA is just under all-time highs, whereas Apple is probably sitting at about, I would say $35 to $40 off its all-time highs. It's been having a bit of I guess, a downturn, as you can see here on the chart. Many are saying that their sales out of China are definitely a lot softer than expected. So Apple stock, an Apple chart there, but Apple reporting earnings, and as you can see, it will be a crucial one for the company. Our last chart here, talking about key tech earnings. Well, why do we focus on key tech earnings? Well, this pie chart here will clearly show why. Infotech, communication services, tech in general make up between 40 to 50% of the S&P 500. And again, that's why people will say, investors will say, well, earnings season off to a good start with the banks, but until we hear what the big cap tech names are saying, we're not going to, give the thumbs up yet or the approval yet for earnings season. We want to hear what these big cap tech names have to say. And if they report good earnings, then yes, at that point, I think we can give the seal of approval on this earnings season. So we're still early in earnings season. We got a lot of tech earnings to come through next week. Still have a number of other companies, pharmaceutical, retail, etc. But as you can see, very important to keep an eye on tech earnings that will kick off. We actually saw a kickoff to tech, if you want to call it that, with Netflix last night. Blowout numbers, 18 million new subscribers, fantastic numbers. So maybe you can say Netflix kicked off the earnings season for tech, but the big caps will report next week. Our second point that I wanted to touch on, as I said, are policy announcements. And these are announcements by, I love that picture, announcements that are coming out of the Trump administration. And as I said last night, there's a perfect example of an announcement. They call it Stargate, I believe. And this will be the project that Oracle is involved in, OpenAI is involved in, and others, many others will be involved in to just further the AI dominance that the United States has over the rest of the world, building out data centers, building out infrastructure. And SoftBank, a Japanese business lender, will lend as much as or invest as much as $100 billion to start in the US, and perhaps increase that to as much as $500 billion. So just on that announcement alone, Oracle was up today 6%. You have all the chip makers, NVIDIA and many other chip makers up $4 or $5 a share. It's just been unbelievable. And as we know, whenever you have President make as I said, off the top of the show, a comment via Twitter or have a press conference, it's market moving, right? And sometimes what he doesn't say is also market moving. And he has the White House, he has the Senate, he has the House of Representatives, and right now he has the approval rating, and our next chart here shows what his approval rating is right now. You can see here it started starting at, looks like, what is it, 47% approval rating. You can see President Biden in blue, he started with a very high approval rating in the high 50% range, and by the end of his 4 years, he was below 40%. Whereas the President Trump, when in his first term, he also came down in approval rating, but it was a bit choppy. And keep in mind, he also had COVID hit the United States during his first term, so that didn't help either. When you're tracking President Trump and what he says and his promises, our next chart, a little bit of a small chart here, will show what he's already spoken about. There it is. So immigration, taxes, he hasn't really spoken about as yet. Energy, so far he's kept his promise, declared a state of emergency with respect to energy so that they can drill, baby, drill, as he puts it. Education, he hasn't really done a whole lot as yet. And he has other things. And if you, I guess there we have, so immigration, we have status currently in progress. We have some things that are, as we call it, complicated. He has fired a number of, as he calls, corrupt bureaucrats. He has kept his promise to pardon a lot of convicted individuals from the January 6th assault on the Capitol. And he's done all these things with his executive orders. And the one that I guess hasn't been, which is the last one on our list, which is imposed 25% tariff on Mexico, Canada, and 10% on China. And as you can see here, it says complicated. What we've heard so far is he's doing an investigation. He has people looking at what is going on between trade between Mexico, Canada, and the U.S. And the USMCA could be changed, and that's what many people believe is going to happen. Our next chart here, talking about currency. You can see just in this currency chart alone how much of an effect just the president talking about something has. So just mentioning tariffs are going to happen. Dollar's been going down. And then the day of his inauguration, he didn't mention tariffs on Canada. And we saw the dollar shoot significantly higher, went up to almost 70 cents. US dollar fell versus the Canadian dollar, something we haven't seen in a while. And then lately, when he's talked about perhaps putting tariffs as of February 1st, our dollar is starting to come down again. So you can see how much the currency markets are being affected, how much the stock market may be affected with his talk and announcements. Our last point is for our top three with respect to your investment decisions, staying in the market. And our first chart is a chart on Oracle. I touched on it briefly, but this is why you need to stay in the market. And you can see a chart on Oracle, and you'll see all the way to the right, you'll see a shooting up of the stock, much higher, up 4.5% when this chart was taken. But you can see why it's important to stay in this market. We know that from the president's former or previous term, that the stock market rises. We have the S&P 500 that shows us that. You can put that chart up. You can see how much the stock market went up during his presidency, his last presidency. It fell at the end during COVID, of course, but markets move higher. And I think for those that are nervous about the uncertainty, I understand. For those that are concerned about the tariffs, or people that just may not like the new president and the way he goes about his business, and if you're not in the market because of that, I just think that's a mistake. We've seen the markets continue to move higher. If you're going to be an investor that is not going to invest just because of emotion, because you may not like him, because you're fearful, I just don't think that is the right approach to take. Market's higher today. Market was a lot higher yesterday. Market has been higher since he was elected as president. Market went higher when he was president from the 2016 to 2020 time period. Markets move higher. And the reason for that is president takes on a very pro-business stance. And I think everybody likes that. It is refreshing. CEOs like that. He creates an environment where individual businesses can do business. Removes red tape. Perhaps he's going to cut taxes at some point. All this is favorable to business, favorable to the stock market. And so if you're someone that is not in the stock market because of that, because of emotion, or because you may not like what he says, or you're nervous, I just think that's wrong. And in my opinion, I just think everyone needs to take it as it comes, be in the market, invest in good quality companies, look for value, and then take what happens as it comes. And to me, I think that is the best approach.